So traders, today I'm going to share a story with you of how I know someone who went from average of $500,000 to $650,000 per month in income from the markets at the peak of it, to then going completely almost, or basically went bankrupt, and to losing it all. And that's exactly what I want to share with you in today's video. So this is not going to be a technical analysis video here, guys. It's going to be more like a story video for you, because I really want to share with you. You guys know my last video that I did from a technical analysis point of view still stands when it comes to these markets. Gold is the best trade I've done in a long time. It's still going, gold. Like, can you guys believe it? Like, gold is still going. Guys. Anyway, so and obviously looking at the stock market right now, guys, we're really topping out. Again, go back to my last video. Nothing's really changed from my last video, but I do want to share with you a story today that I believe is going to really help you out when it comes to your trading. Or hopefully it does anyway. So let's actually start off with this. It was back in, for myself, I've been trading the markets for 20 years, okay? 20 years. And it's actually taken me a long time to get to where I am right now today, right? I've gone through so much crap, and so many setbacks and so many failures. And there's been a lot of times, guys, when I just felt like giving up. Right? There's been so many times where I just felt like I'm the only person going through this. Trading is so difficult. Trading so hard. Every time I get in, I get stopped out. It's just so difficult, right? So hard. And so I went through so many times of just feel like I'm just wanted to quit, right? And so if you're at that place right now, I understand, right? I really do understand. That second link in the description there, guys, or that link in the description, I'm giving away a free trading course. Grab that free trading course, because the very first video that I did is I put together the top 30 mistakes that I was doing that I needed to overcome in order for me to become the trader I am today, which does really well from trading. Now, a bit of caveat on that. I want you to understand what, before I get into the story, I want you to understand what actually is a good trader. See, a person who makes good money from trading, you may think, oh, he's a really good trader every week, he makes money every week, and so on and so forth, right? It's actually not the case. What is a good trader? A good trader is this, right? A good trader it has the ability to be able to be patient and waiting for his setup that comes around. Because I know for myself, right? I'm a really good trader only because I have learnt patience in waiting as long as I have to. A week, a month for my setup. Because when I do, I get trades like gold that last a month to have incredible home run trades, right? I'd rather have just one really good trade a month like gold and be in it for a month and make a lot of money than have all these small little trades, right? So I hope you can see like the differences between where I was before and where I was now. One of the biggest things out there for me, and I was actually talking about this with my private clients, and then I'll get into today's story, but I wanted to share this with you because hopefully it's going to help you out as well too with your trading. And again, that link in the description there, guys, I'm giving away a free trading course. You can actually get access to that. The big thing out there, guys, the big thing that I really do say is one of the biggest things from now to my trading 20 years now to where I was before is that where I was before, I was trading probably 4 or 5 different types of trading systems. It was different patterns, different structures, different indicators. All right, I was doing that sort of stuff. And I was trading a lot of hours. It's ironic of how things worked out for me right now. So ironic. And ironic, what I mean by that is that now I trade one type of main setup that I trade. I only trade half an hour a day, and my income has exploded from my trading. My success rate especially this year, has been amazing, really high. And I'm actually not trading a lot. So there's what you actually think about trading is the opposite, right? And so I'm just trying to share with you that throughout my last 20 years of, for myself, like I was once $250,000 in debt. And the reason I'm giving you this backstory here, because I'm trying to get into how I actually got into knowing this guy, and how I was so fortunate not to go down the same path he did of trading the markets. Okay, and how I trade the markets. That's why I'm giving you the backstory right now about me and a bit more about me. And also, if you guys don't know much about who I am and who's this guy called John Howe and what gives me the right to actually teach you about success and trading, trust me, I've got the background, right? So, and so right now, I'm at a place right now where I trade one type of system. I actually don't trade a lot. And again, traders, my type of trading is not actively trading. I'm waiting for opportunities that give me the potential of having big moves and capitalizing on those big moves. Now, what is a big move? A big move is what's happened with gold for the last month, right? I actually know, month and a half now, or almost a month and a half, right? A month and a half of almost continuation move up, apart from a bit of a sideways period there. That's what I'm about. I'm about trying to get in and capitalize on big moves instead of trying to trade 40 times a month and trying to capitalize on all these small little moves and get in and get out, and try to make a little bit of money. Like, no, I'm trying to jump in on big trades to make big money instead of these small little trades. Anyway, so there's a bit of a background about me, guys, about where I am. And so the reason why I actually have my actual coaching program and the reason why I coach people is because I try to share people exactly what's taken me 20 years to figure this out, right? And so again, guys, but if you do need some help, grab that free trading course link in the description there. So the really big thing I really wanted to do this video, because I want to give you a bit of a cautionary tale, okay? Let's actually be honest here. Trading isn't a difficult thing, right? There's a lot of difficult things that actually goes into actually trading the markets. The first thing is that understanding what goes into a high quality setup that you believe in. Foundation. Do you actually have a high quality setup that you believe in? And if you don't, that's the foundations, right? Then the next level up is why is trading so hard? Because then I was talking about this with my clients today. And again, guys, I'm going to get to the story about 650,000 and basically basically going bankrupt. To the reason why I'm saying this is because of what I've actually learned about trading itself, right? And it'll make sense when I actually get into the story here. So, but then why is trading also hard? Trading is also hard because a lot of it's our emotions, right? It's not the actual system. Like, I can give you a really high quality system. In fact, I do teach you that. As soon as you get access to the trading course, the very first page is you can actually register for a webinar of mine, and I teach you my system for free. I actually teach you my system for free. And if you know my system, just wait around for those trades. But they don't come around that often. Now the issue is you being impatient and thinking I need a lot of trades, and you get the point there, right? So here's the thing. So so for me, and that's obviously the big thing, right? It's the emotions, right? It's the emotions of I want to trade a lot because I want to make a lot of money, and that's the biggest myth out there in trading, right? And unfortunately, if you watch these people that are trading right now, what are they doing? Like, what are they doing? Like, they're making $250 here, $500 here, $1,000 here, and so on and so forth, right? It's like for me, it's like, I don't want that. I want the opportunity to have a 10 or a 15 or 20 or a 50 or a six-figure profit. You know what I mean? Not just a $1,000 profit. No, I want the opportunity to do that. You know what I mean? And obviously we start small and we grow from there. But the purpose of me saying that is we want to make sure we're setting the game up to win with our trading, right? And so therefore we want to be able to do what? Cut our losses short and let our wins run. No, John, tell me something new. Now let's get into the story of why of this story and why some people are doing this exact strategy right now and why it's a very, very risky strategy. See, back in the day, this was back in 2008, I think it was 2008, 2009, it was 2008 when the market was going down. I had no idea, right? Or just no, I had no idea about the economy. All I heard, it was pretty bad. I'm like, it's pretty bad, is it? Oh, okay, cool. So all I heard was pretty bad. So what ended up happening was this. When I back in 2008, I was just trading the charts, right? So I'm a chart trader. You can't trade fundamentals, right? It's just, you just don't. If this is a fundamentally good company, so let's trade it. No, trading is an active approach. You're getting in at the right time. You're maximizing your profits. You're getting out. You know what I mean? You're using trailing stops. That's fundamentals. Do not say this is fundamentally good company, so I'm going to trade it, right? Trading is an active thing. Investing is I'm buy and hold for many years, okay? So anyway, what was happening is that this particular person that I got introduced to, he was really good at doing what's called credit put spreads. That was his main number one strategy. Now that basically put spread simply means that he was selling an option and he was buying the option, and that was the spread. And just say the spread was between the sell and the bought option, it was $1. But for that $1 spread, he might got 30-cent credit. Right? So his maximum risk on that there was $1, right? But for that $1, he got 30 cents. So he made 30% return on his risk. Make sense? So his maximum risk was $1, and he received a 30-cent credit for that. And that's what he would do. And the reason why I brought up fundamentals is because guess what? Guess what ended up happening to this guy? Well, guess what? The way that he traded was when the market went down and there was these companies that were fundamentally undervalued, he would do these strategies 30, 60 days out. All right, he'd do the spread. And and most of the time it did go up, right? This was actually before 2008, right? Most of the time it will go up. And so and that's actually the way he was trading, right? So he was trading like that. So what ended up happening was throughout this entire process, he was actually doing really well, doing really well. And again, this was 2006, 2007, he was doing really well. And I got introduced around 2008. And I think the reason why was because he knew something wasn't right. And I didn't know this at this time, but I got to know this guy around 2005, 2006. Maybe 2006, 2007, as the market was still in a pretty big bull market, right? And so I got to know him or know of him because of what he was doing there. And again, at the peak of it, he was making I think at the peak of it was around $600,000 per month. I mean, income that he was making, like we're talking lots of trades every single month, and big positions, right? We're talking a lot of positions in the markets here, a lot of money, right? Millions and millions and millions of dollars of positions to make this money. So anyway, so he was, doing his thing, right? And so 2008 came around, and I didn't think anything of it, right? 2008 was actually my very first bear market that I traded. And so, because again, I started trading 20 years ago. And so to have the real first recession, it was new to me and I didn't understand it. But what I did understand was how to read the market. So because the market was in a downward trend, I was just trading with it, right? And so, but what he was doing, he only knew one way. He didn't really understand technical analysis. He just understood fundamentals, reading numbers and spreadsheets and, okay, this is undervalued by this much. I'm going to do this strategy here. And that's the way that he do it, right? And so what ended up happening was, as you know, right, the market then kept going down and down and down. This is why I say, if you are this company's so undervalued right now and you're going to go down that path, that road, yeah, it's going to be good in a bull market. Like right now, we're in a very big, strong bull market, right? And we're probably going to get a bit more of a drop here soon to get a correction, but we're going to continue this bull market for a while, I believe. We'll wait and see what actually happens, okay? But what ended up happening with this guy, he was doing a lot of put spreads, and we're talking like lots and lots and lots of trades every single month, right? Making all this money, making all this income. Again, around 600,000, 650,000, somewhere around there he was making. And then what ended up happening, right, is that it doesn't matter how good of a fundamentally company something was, what happened in the recession? Pretty much a lot of stocks, most stocks went down and really went down, right? And every month they become more undervalued, more undervalued, more undervalued, more undervalued. And what it ended up doing was, because most of the time doing this type of strategy, the market may have just gone sideways or up or even down a little bit, but because he did it below the price, the spread, he actually was most of the time it was expiring worthless. And so he was doing really well out of this strategy until one year became, and this was 2008. And again, I didn't understand the reasons why he brought me on, but he knew I was a really good trader, right? I'm a technical trader. I'm a chart trader. That's why, guys, like when you see me in my videos, my whole forte, and I was talking about this with my clients today, When I first started trading, I didn't want to say, okay, what's an undervalued company so I can buy it and do a Warren Buffett strategy? I'm like, I am in a job right now earning $50,000 a year, washing cars for a living or doing laboring for a living, and I hate this job and I want to make money this year so I don't have to do this job. That was all my focus. That was my entire focus. And to make really big money, maybe 3-4 years down the road by buying a really good company right now and holding it for many years and maybe getting a little bit of a dividend just wasn't my cup of tea. It's like, no, this is not for me, right? I want to learn how to make money this year, right? And I always say this year and not now or actually I was saying now back then. I want to make money now so I don't have to work. What I do realize I say this year because trading income is not like a job income, right? You're gonna get some months are gonna be quiet where there's not many trades because the system, you're just not gonna get a lot of trades, and then some months there's gonna be a lot of trades. You guys have been around for a while now, you know exactly what I'm talking about. So anyway, it was through 2008, and again he brought me on and he wanted me to teach him about this sort of stuff and teach his clients and so on and so forth what he's doing and teach them about what I was doing there because at that time I was trading really, really, really well, right? And I got featured in a book and all that sort of stuff, whatever, it doesn't matter. But the whole thing about that is that through 2008, I didn't realize this, but he was doing really, 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 really bad, right? The market could come down and down and down and down, and the strategy that he was working for 2 or 3 years in a very big bull market is now went down. And I'm pretty sure that that was 2008. I'm pretty sure around 2009, possibly 2010, he disappeared. And I didn't know what ended up happening to him. I recently connected with that particular person on Facebook, and now he's in is now like a doctor or something, or like nursing or healthcare or something like that. That's the field he's in. And the really interesting thing is, the reason why we connected is because he wanted to send me a message for me to actually join his, I think it was a multi-level marketing thing or a product or something like that. And I just like, oh, come on, man, seriously. I was actually really, really, really excited to actually catch up with him and see what he's been doing for the last 14 years. But he got blown out of the market really quickly, and then he hasn't gone back to it ever since. And I really want to bring this cautionary tale to you guys, that the reason why that strategy was so bad was because you think about it, right? And I preface this with the pre-frame of the backstory of what I'm saying. And one of the big things to success in trading is having the ability to cut your losses short and let your wins run. When you do that type of strategy, yeah, your maximum risk is say $1, the spread, depending on I'm using that as an example, right? And yes, you do get a credit for that pretty much straight away, right? A 30-cent credit for that. But what happens if you have to start selling those options for a loss, or what's called rolling out, which simply means you're getting out of the position right now, and then you're going to do the exact same thing maybe another 30 or 60 days later on. Right? You want to have the ability to be able to cut your losses short and let your wins run. It's one of the biggest things out there. And that's like, for me personally, when I'm trading the markets, I really do like trading options, right? And just like with gold, right? If you look at gold, gold right now is a really, really, really successful trade for me because I just simply went straight options, right? Just straight options, no funky strategies or any of this sort of stuff. Like, keep it simple. Now, guys, on the back of that, making money from the markets is about having a system, right? Like if you don't have a system right now, guys, you're kidding yourself. You're not going to make any money, okay? Doesn't matter what option you pick, you're not going to make money. But on the back of what I said there is that I'm trying to share with you that like, for example, gold, like I'll give you like if a 10% of my position in gold, would equal the risk that I would have is around 2 to 3%, right? So 20 to 30% of that option is roughly the risk that I would take. I've been in this option now for over a month, and you can just imagine the return on that there, right? Hundreds and hundreds. You get the point there, right? But the whole thing about what I'm saying there is I'm trying to share with you that I'm seeing a lot of people doing these writing options strategies, right? Selling option strategies. And some people are doing it what's called selling naked, where you're just selling the put option, right? You're selling the put option because the market's in a big bull market and it's naked, which means there's no protection there. And then guess what happens? Then suddenly what happens is that you are now in a position where you're naked, and if the market does really turn really fast against you, you're going to do really bad. It's not going to be good, right? I actually know, because when I went through a divorce a while ago, I lost everything the second time, and I remember moving into a share accommodation place. True story. And Lee, I remember his name, Lee, and Lee was the owner of this place, and he would actually live in this house as well. So he'd live in it, and then he would rent all these rooms out to people, right? So, and the reason why he did that, because he didn't want to work. So obviously the income from the rooms was making enough money for him. So anyway, so the whole thing about him is that even he was saying, right? Like he said he spent 2 or 3 years doing really well, writing options. And all it took was one big bear market to come to completely wipe you out. Like why? Don't trade like that, right? Don't trade like that. You want to be able to do well in good bull and bear markets, right? Bull and bear markets, which simply means, like traders, I can't wait for the bear market, because once you know the really high quality patterns to look for, oh my goodness, you really can do really well from trading. So traders, I wanted to just share this with you here to really sort of help you and guide you if you're tempted to go down this path because it sounds good, like, oh, I can make money now just for making a promise to the markets. Yeah, that promise may never happen, but all it takes, guys, is just one time or just one really bad sort of period, which is coming, right? When that recession does come and we do get a really big decline in the stock market, it's going to be really bad for those people. And I don't want you. I want you to be around. What I teach is really high, powerful, high probability trading setups, and then wrap around with some leverage. But the leverage is about the leverage is still only having a few percent risk on your account while potentially growing it by 20, 30, or 40% on your account.